Good evening. This is Ken Long from Tortoise Capital Management, August 25th, 2009, coming to you from Berlin. Quick look at the market health check. We had another basically sideways day today. Price remains in this 102 to 104 range. Didn't really vote one way or the other. The three support levels on the downside, 102, 100, and then 98 would still keep it within the general uptrend, but those would be normal pullbacks. We're still in bear quiet. ADX is continuing to improve, plus DI greater than minus DI, and you can see that we're still in overbought conditions. Failure to follow through 2 days in a row is balanced by the fact that it didn't fail after 2 days in a row, so the sideways movement there is to be considered consolidation, so that looks fairly strong. Take a quick look at the daily summary. Bull quiet, we're at 86 on the 10-day index, so we're still overbought. You can see we're right on the edge of that overbought condition. Alcoa, DuPont, Cisco, Coca-Cola are the 10-day max pains, so there's potential in those for victory. Alcoa is the maximum pain candidate in the S&P 100 too, so since that's a favored trading stock, I'm going to look at it very closely. No signals in overreaction or channeling. Volatility index is up to 10 now on the scale of 0 to 100. Keeps us in quiet, but we're getting closer to move it into normal conditions. The slope of the 30-day regression line still continues to drop as we start seeing these sideways days. The regression line slope gets weaker. We're right on the boundaries in volatility, right on the boundary of quiet. And you can see today that we have quite a number of high-quality triple screen setups in the large caps. In a separate video, I'm going to show how to frame those trades. I'll frame 5 of them. And then a quick look at our Williams percent R. Alcoa is the only symbol in the Dow that is dramatically oversold, and Bank of America today actually had a breakout to a high above 100, meaning that it closed higher than the previous 10-day trading range. But you can still see that most elements of the Dow are still considered on the overbought side of fair value. On the Dow tactical, of note, yesterday Alcoa was a minimum performer. It is again today. Yesterday, ExxonMobil was one of the outstanding performers, and it was an underperformer today. It sort of reinforces the idea that the extreme conditions tend to produce extreme results, whether that's up or down, and that remains true. As you can see right now, there's a real distinction between Alcoa and the rest of the Dow. It's really suffering, and since I'm a bottom feeder, I'm very interested in that. Among the ETFs, energy, which was so strong yesterday, had troubles today. Financials were up, probably on Bernanke's news. Who knows? The commodity indexes were all hit hard today. The blended commodities, oil and coal, and whereas silver outperformed today, so that silver seems to be pulling away a little bit from gold. EFA better than SPY, so we've got some global strength going on as well. So that's a quick look at the tacticals. We can see now, at least among the ETFs, fewer of them are now considered to be in overbought condition. Yesterday that was about 2/3. So the pullback today has brought some of them back closer to fair value. So that's a quick look at the daily tactical summary. Thanks for your attention.